Hi students, O-Levels Online presents the video lecture series for other adjustments of financial statements. In this video, we will discuss the last in first out, LIFO method's definition and its explanation. This video series is helpful for those students who are appearing in Cambridge O-Level upcoming exams, either in June or November, through CAIE or IGCSE 9-1, for accounting 7707, or 0452 or 0985. Let's begin the lesson material. What is the last in first out, LIFO method for inventory valuation? It is a way to manage and value a company's inventory where the most recently acquired items are assumed to be sold first. This method is the opposite of the first in, first out, FIFO, method. Let's check its key concepts. The first concept is last purchased, first sold. Under LIFO, the cost of the most recently purchased inventory items is used first, when recording the cost of goods sold. This means that the latest costs are matched with current revenues. Let's check another concept. The second concept is, the ending inventory consists of the oldest costs, which might be significantly lower or higher than current market prices, depending on the market trends over time. Let's check its advantages. First advantages, matching current costs with revenues. LIFO matches the most recent inventory costs with current sales revenue, which can provide a better reflection of current costs in times of inflation. Let's check the second advantage. The second advantage is the tax benefit. In times of rising prices, LIFO results in higher COGS and lower taxable income, which can reduce tax liabilities. Let's check some disadvantages too. The first disadvantage is, lower net income. Higher cost of goods sold reduces net income, which might make the company look less profitable. Let's check another one. The second disadvantage is, inventory valuation. The ending inventory might be undervalued on the balance sheet, as it is based on older, potentially outdated costs. Let's check another one. The third disadvantage is, complexity. Tracking inventory and costs can be more complex with LIFO, especially if prices change frequently. Positively, you got the clear understanding of the concept of LIFO inventory valuations, its definition and related explanation as well as per your syllabus and examination point of view. If you have any query regarding the lesson, kindly ask in the comment section of this video. We will discuss the impact on financial statements and related working example for LIFO method in the upcoming next video. You can download the related formats and lesson material through the link provided below. Thank you for watching. I hope you learned something new today. If you did, like and share video with other people to learn from it. And please subscribe my channel if you want to see more videos like this. Take care of yourselves. I'll see you in the next lesson. Goodbye.